Good morning, everybody. Happy Friday to you. Hope everybody is good. Getting ready for the weekend. Going to run through a few charts. Let's get right into it. Next week, I'm going to start some travels to some Bitcoin conferences. And some other personal travels. So, going to be around Helsinki, like I said, Riga for Honey Badger, and some other travels. But one of the things that I will release next week, hopefully, is if China updates their monetary base for June, which they haven't done yet, we can update this. This is more or less done. It's the value of all currencies printed by their central banks as of June 2025. China is going to be slightly different. Don't have this data, but as of May, I have it. It's pretty close. The difference would be exchange rate between May and June, but holding the May value constant in this chart. Anyway, 26.8 trillion. Okay. So if you go to March, value is 26.2. So they are going up slightly. All right. You see, we've had these sort of drops and then bumps up and then drops and bumps up and then drops and now bump up again. Generally, worldwide, they're flat or maybe printing a little bit. The US is the biggest currency that's not printing at the moment. And a chart like this is always a little bit hard to show, remember, because these are currencies. So, Japan can have its GDP per capita and its GDP increasing every year in yen. But if you looked at it in dollar terms over the last 30 years, it'd be the same, which is pretty wild. So it's the same thing here. It's Wittgenstein's ruler. You'll still get the general idea for how they've printed versus, tightened. Okay, so after the GFC, putting all these currencies in dollars, you can see that it's rose pretty quickly. Then they tried to globally soften from 2018. That lasted a year and a half. And then even before the word which shouldn't be named, we get downgraded on the algos. It was a little bit uncertain. And they were even printing a little bit even before March 2020. Started here, September, October 2019. But then things went crazy. That finished off at the end of 2021. Okay, Jackson Hole speech. I think 2021 was a highly anticipated one. 2022 as well. They're going to start tightening. And they've been tightening roughly ever since, but the US tightening the most. The other currencies, like I said, flat to down. We can look at the euro in dollar terms. Right. This is the euro both losing in terms of the dollar, but also contracting. $5.26 trillion at the moment. equivalent in euro. You see it's starting to blip up a little bit more. Rest of the world, sterling, yuan, yen, dollar. So when we talk about the printing press, talk about that a lot in Bitcoin, this chart is the literal representation of the printing press. Core of the system, money. There is no further reducible form of fiat money than this. This is the core of the system. So I've been plotting this since about 2018. Right? Started doing it. It was 20 trillion. Now, it peaked up at 30 trillion. Now it's 26 trillion. So we're moving back up, you can say. Relative to the last few years. Of course, last few years we're moving down from 30 trillion, but at some point, there's going to be more gasoline on the fire. It's pretty clear. At least in the U.S., they want lower rates, and the president always gets lower rates, especially during re-election season. Financial repression is a word that's used often with QE. You can basically see that here. And it's just a whole different world from 2008, the GFC, than before. Still grows. We'll go back to these exponential charts. Still grows if you just look at that linear scale. The right-hand side always. This is still exponential growth. It's exponential growth. So the right-hand side always looks much higher than the left-hand side, no matter where you zoom in. But from 2008, there's really different trajectories, changes in that trend to be even faster. Having said all of that, just to remind you, and this is why days like this, when Bitcoin might fall to 115,000 from 118,000 or whatever, my thesis remains that 95% of the action is on this chart. Actually, let's do this. All right. 95% of the action of Bitcoin is from this itself. It's not from how much money they print. It's not from GDP. It's not from pandemics. It's not from meme stock trading. It is from the adoption of Bitcoin itself around the world. And the easiest way to see that adoption is to look at the price. There are other pricing / market indicators we can look at, like hash rate, address growth in Bitcoin, that also move in this power curve, this sustainable, nice, smooth growing power curve. But price remains the loudest signal. And my thesis remains that 95% of what Bitcoin does as an asset has only to do with this chart and the trend itself. The remaining can be this: central bank money printing. All right. I remind you, I started this in 2018, tracking this, but if you just look at this from 2009, when Bitcoin was born, same time as the GFC, Bitcoin pumped here, Bitcoin pumped here, Bitcoin pumped here, and Bitcoin pumped here. This period, you could say, just eyeing it. Okay, clearly it looked like the Bitcoin pump was lining up with a money print pump. In fact, I could show you a chart where we can just look at it so I don't have to talk about it. So I understand that. I understand why all the talking heads and the analysts want to create the narrative every week about what Bitcoin is doing, why it's doing this. But it remains on the edges, as far as I'm concerned, as far as what Bitcoin itself is doing. So here, try to show this. Actually, I need to extend that out. Sorry, 1 second. 1 second. Again, why some of these go automatic, some not, why I don't have it on my website. But I will do a report on this next week. Okay. On the money supply. Let me know if you have questions, by the way. We don't have to lecture. I'm going to pull this out. In terms of BTC. Oh, maybe I have to wait again. Sorry, doing these on the fly is never helpful. Is it? That's annoying. I'm very good with the dead time, aren't I? All right. Working on updating this one chart to show you, again, the thesis that 95% of Bitcoin price moves happen because Bitcoin itself grows in power at a sustainable rate. One second. Finally going to pull it up. And I think the other driving factor here of why Bitcoin can do what it does and why we get these pretty cyclical booms and busts, of course, as people know, does have a lot to do with the 4-year halving cycle, where we get this boom, about a year and a half after the halving each time. And we've had it 3 so far. So had it 2013, 2017, 2021. 2021 came a little bit early. All right. this was a year after the halving. This was a year and a half after the halving. But, in general, a year and a half. So we're already a year after the halving, and we have not seen a pump. Will we see it a year and a half after the halving? I'm still under the impression that yes, we could. All right. So here's what I'm talking about. Going back to this, it's the global money supply, $26.8 trillion globally right now, worldwide, in fiat money. Okay. But this is not just dollars. In fact, dollars only make 20% of this pile of cash. This is piles of euros, yen, yuan, sterling, Swiss francs, everything. This is the trailing 12-month growth rate of this chart, natively weighted. There's a lot of there's a lot of currencies in here, a lot of data. 50 currencies are in this data set. So what you can do is you can weight it each month by the currency based on how big the monetary base is itself in dollars. So you don't look at dollars at the end or at the beginning or the middle. You look at each month and just keep updating it. And this is what you get. You get these mountains. So again, going back to the Federal Reserve balance sheet, which I talked about yesterday and the day before, when all the economists of the world and Ivy League universities were cutting their teeth in the markets. Central banks could grow globally at a pretty consistent rate, which happened to be about 12% per year, 1% a month. All right, it could be a little bit lower here, as it was in the start of the 90s. All right, then went up, 94, and then a little bit lower here. The U.S. in particular was trying to balance its budget right here. Debt-wise, this is still money printing. Money printing, they buy bonds, of course, as a major use of their money. The source of the money is ex nihilo. They just print it. They don't lend it into existence. They literally just print it. But then to balance it on their balance sheet, they will buy an asset, typically a government bond. So the debt scenario certainly plays in. But the U.S. was trying to balance its budget here. And it did, actually, a couple quarters. So it had less debt. So less money was created. And with Y2K, right, a bunch of pumps in money. Like I said, some crazy libertarians would bury tractors at this point. Send out a lot of newsletters. Tell you to bury your gold. Then there was a contraction. .com, also 9/11, occurred. And then Alan Greenspan, the maestro, is the narrative of the U.S. at least. Took interest rates to the lowest they'd ever been. Sort of some money printing. Other countries did the same. Then we led up to the global financial crisis. They tried to cool off before the global financial crisis. Still increasing the money supply, by the way. These are all increases of the money supply, just lower increases. Lower rates of increase. All right. They tried to cool it off right before it. Of course, that causes the crisis because you need the perpetual money print to keep this going. And then you have QE1, 2, 3 globally. These are global figures weighted. So a trailing 12-month run rate on the money supply was something like 33, 30, 31% at this period. And you can see that is a high in the modern era. Since the Nixon shock. Then again, they try to regularize the balance sheet, as they say, normalize the balance sheet. All right, so less and less money printing, led by the United States here, by the way. The United States was not printing money. If you said all that the all that the United States does is print money. You were wrong from 2014. They were not. And many Bitcoiners were saying that. Again, I'm not defending them. I'm just telling you. That's how it works. And then they went too tight, too fast. Repo market spiked here in the U.S. right here in 2018. They had to start printing a little bit more, and then the crazy period came from other things, other reasons, which I won't say again to try to save my algorithm, even though I'm really terrible at the algorithm. And then they started to regularize again from 2021. So really, they've been flat to down, but weighted average global, a little bit of contraction here, some expansion there. Flat, a little bit down over the last 4 years. Okay, so we know that Bitcoin only occurred here, right? So let's just zoom in on this period. So these are the mountains now again. It's a trailing 12-month issuance globally of the money supply. You're looking at the rate of change of the printing press right here on a trailing 12-month basis. Okay. Not on a monthly basis, on a trailing. So you're always thinking annually. Okay, so here, when it's a little bit above, it's 1.1% increase over May 2018. Here, it's negative 0.7%. It's a 0.7% decrease over July 2018. Just, that's how it's going. Let's put Bitcoin on. All right, let's put Bitcoin on. The change now for Bitcoin, I could do native units, which is actually Bitcoins, and you get very high numbers at the beginning, and then it'd come way down now to like only be 1.8%. That is one way to do it. But another way, as we're talking about the markets, and markets are reflecting of the Bitcoin price, is to just measure the market cap. Okay, so I'm going to do the trailing 12 months change of the market cap itself. It's obviously huge. Huge numbers here, an increase in market cap, thousands of percent in 2011, then a decrease. All right, thousands of percent in 2013, trailing 12 month, and still increase here as the price was high, but it was coming down, then went negative here in November 2014. Okay, on a trailing 12-month basis. Big drops, big ups, big drops. Okay, so clearly here, this has nothing to do with the central bank money supply. Zero. These huge drops in Bitcoin have to do with the pump, the expansion of interest in the Bitcoin network from 2013. Same here. Although I submit it does kind of line up with the Federal Reserve decreasing its balance sheet, and many central banks decreasing their balance sheet in the 2017, 18, 19 period. But again, it's circumstantial. This is them. They're not even thinking about Bitcoin at this point. Bitcoin, yes, it did top in 2017, but it's not because Bitcoin is topping in December 2017 that central banks are trying to normalize the balance sheet. It has to do with QE 1, 2, and 3. All right, so it's circumstantial that it lines up, but it does kind of line up a little bit more here. This lines up the most, right? Not completely. Bitcoin pumped ahead of time in 2019. But the, what's the word that rhymes with? Trying to be too cute. The pandemic period of silly season money printing, okay, here. It does line up, it's true, with meme stock trading and people trading Bitcoin and crypto in 2021. But again, Bitcoin itself way outperforms, to the tune of 10 to 20x more as far as the change. And then Bitcoin down again, interestingly, kind of down again. But I would submit to you that, again, this is very circumstantial. All right, this had to do with a specific fiat event, all right, that they were printing, and then it was down again simply because it's a year after the halving, and people see that there's especially a lot of scams in the wider ecosystem of crypto. So it flushes a lot of people out of their Bitcoin. You have literal scam protocols like Terra, Luna. But then, of course, we can see the circumstantialness of these things lining up, and that Bitcoin has been pumping again. When Peter Zion said on Joe Rogan that it was $16,000, $17,000 overvalued when it was $16,000, it was somewhere here, right? December into 22 into January 2023. It was already up from its bottom on a trailing 12-month basis here in June 2023. And pretty high. ETFs come here. Already here. January 2024. Further pushes up. But again, these are narratives that are doing this. There are some things that we can say, yes, contributes to the price movements. But these mountains of Bitcoin moving up and then down, I submit to you, my thesis again is it's circumstantial, where it was for sure here. Right? Didn't match at all here, at all, to what central banks were doing. What it matches with is this curve, which is the 96% R squared, which is a reflection of Bitcoin's network adoption. So it remains my thesis. Good evening, Tim. Let me know what you guys think. It's amazing how huge the asset is compared to other assets. As we know, it's a top 5 stock. It's not a stock, but if it was a stock, it would be a top 5 market cap. It's bigger than silver. It's a massive asset. Yet still, I would submit to you that this curve itself is the strongest thing that Bitcoin has going for it. Yeah. Ben, yeah, I mean he's the ultimate. He is one of the funniest, no doubt about it. If I recall, he would call people the bit F word, right? That was how he liked to describe Bitcoiners. It's amazing they just don't understand the system. It really is amazing. But anyway, it's where we are. I'm happy to go along with the argument that when central banks print money, it's gasoline on the fire for Bitcoin. I think that's a fair statement. The question is how much. Each one of these green peaks, these pump seasons, is lower than the last. But that's not because it has anything to do with this series. It's just because that's how Bitcoin is growing according to the power curve. So here we're at, I'm cutting it off at 160%. 4 times what I cut off this one at, 40%, by the way. So this is on the left-hand axis. Bitcoin's on the right-hand axis, by the way. So it's even just to show you how the scale difference is 4x even there. But I think the point should be made that, it's nothing to do with central bank money at this point. It's just because it's an awesome asset that people see utility in. In your mind, you can think about central bank money, and I do make these comparisons to show you precisely this, but I think everything is pretty circumstantial still with what central banks are doing. I really do. Yeah, I mean, it would be good to try to quantify what I'm saying more than just showing these stats, but I haven't figured out a way to do that yet. Good morning, Yahim. Quite early for you. Yeah, it would be nice to try to quantify it. Think about, I'm sure you guys have listened to podcasts and watched talking heads who talk about all that central banks do is print money. All they know how to do is print money. They were not printing money during this period, and Bitcoin was flying, and the money stock was flat to down. So if you really dig into the numbers, they tell a different story than what you might commonly think. Like, it's a fine narrative overall. I mean, it's why I'm holding Bitcoin for sure. And I'm not holding stacks of dollars or euros or Russian rubles. So I think a good question to ask is, when does it not become circumstantial? When could these things really start to be correlated and related? But I don't see it at the moment. Good morning. Thank you very much for joining. Thanks for your comments on YouTube. Always try to respond to them. Can't sleep? Let me take that off. So I think it's really exciting. And I don't know, I don't have much nerves about it. I guess, if it's your first time coming into Bitcoin and you bought here, at 16,000 and you're thinking about taking profits or you're worried, I can understand that. But from the overall picture, there's just nothing to be worried about. Even the growth of the trend itself is exciting, right? So back to the 2020, only 4 years ago, that trend, right, was $20,000, the black line. And we extended 2x, 3x, 3x at the highest points, 3x the trend, right? Which is why I'm thinking 3x again max. But just, simple numbers, 3x the trend. Now the trend's at 100K, rising $100 a day. Could I be wrong? It won't extend 2 or 3x? Absolutely. But back to the issue of TradFi, options, futures, institutions, Bitcoin treasury companies muting this volatility, both on the upside and the downside. Again, I haven't seen great evidence for that either. I showed the volume charts yesterday. I got to work on that more, but I was generally in the right on the ideas there that spot volume of Bitcoin is still enormous compared to the spot volume of any of these companies, Strategy, Metaplanet, even the ETFs. But volume is probably the best. Going back to your question, Tim, volume is probably the best metric. And I don't have a full picture yet. I'm trying to. You can spend $10,000 with Glassnode and they have some pretty good data probably, but I'm trying to build it myself. It's taking a little bit of time. But even brass tacks numbers, we were just talking about it, right? So Bitcoin spot is now up to 100 billion a day. Okay, it can be like 50 billion, 70 billion dollars, 90 billion. The other stuff all put together, Bitcoin treasury companies, miners, ETFs, 20 billion, 10 billion. So we're still outsized there as far as exchange volume when people are actually buying spot Bitcoin, the real Bitcoin. It's growing. Synthetics and all these derivatives and strategy tickers. It's growing. That's probably the best metric. So I'll work on it, trying to get a volume analysis. Good morning, Gio. Price crashed to 115,000. Didn't you see it? It's just a joke. 114,955. I pulled it in at 115. These would be the general extremes, these bands, which is still a huge range, right? This still scares people. So 80% of the time, that means between the 10th and the 90th, 80% of the time, prices between these bands. And more so to the lower side, as you can see, because the lower one is farther away. Good move. I'm not smart enough to get this. Yeah. And I think there are plenty. Another thing I want to show more is the UTXO vintages, the holders at different time periods and how they've been moving. And Checkmate, he's good on Twitter. He's been showing how there's a lot of people who've just been selling into this. People that have held. We saw this 80,000 Bitcoin holder on July 4th sold, moved his coins. So that's also a part of it. There's always a price. There's a price for everyone in Bitcoin. One theory back in 2017, I remember, people were talking about was maybe the 4-year cycle would be extended. Maybe it would have been 5 years till the next pump. That turned out to be completely wrong. In fact, the next pump, actually we had 2 pumps. We had one here, which did not happen in this crypto winter, right? We just did not have that level of it. So we had one here, but then we had one here. Six months before schedule. So here we are a little bit late on that, you can see, but doesn't really bother me. Now I get it. Thank you. I thought it was some literal, like phonetic, like when are you going? Yes. Should I get a image chart for someone? I'm sure everybody knows the Yugo. That's good. I need to be thinking about the Zhigul or the Moscovich if the Russians are going to invade us. Not the Yugo. Hello, Matt. It is really. It is incredible. Whoops. Did this just go blank? Sorry. How did that even happen? I don't think I have a live feed. Maybe it is live fed in. No, I don't know. I'll go back to that. Yeah, it's very exciting. Very should be calming for people. I know a lot of people want to get their Bitcoin fill, from a constant stream of what's changing in the markets. And there are, I mean, in the industry, and there are awesome things with, eCash now, Chaumian Mints, Cashew. It's doing a great job. Lightning, Noster stuff. But I really, and I'm talking myself into this as I talk to you guys. I'm just reaffirming my thesis, but I really don't see any reason to like worry about liquidity in Bitcoin or what central banks are doing, because again, this is the figure. This is the central bank figure, right? 26.8 trillion. And if you mark that on a trailing 12-month run rate, I just don't see a pattern yet. Yes, you could argue that the pandemic pattern matched, and the downside as well, but not the upside here. This was November 2014 to September 2015. October. So it was a year here on the down candles or flat candles. And let's count from here. October 2018. May 29. This was actually pretty quick recovery. Although, that's that 2019 spike and then went down again. February 2022, May 2023. Yeah, I mean, they've been pretty consistent, right? Like a year. A year. When they've done that. But again, it's just to illustrate the point that central banks can do whatever they want to do. They're wackier than ever with their balance sheet. I mean, this is pretty encompassing what you're looking at. I don't have 50 currency, 50 central bank data is going back to here. Like they kind of just come in and they're added to the pie as I bring them in. And the first month is never counted, by the way. It's always weighted. So it's not like, if a new central bank came in and then there's a lot more liquidity than you added the first month. That's not how it works. You're always adjusting for that. But anyway, the point is, they're kind of consistently at 1% a month. Right? This is trailing 12 months, so 1% a month for 30 years. And then things really start to go weird, really, from Y2K. A lot of money printing down and around. So again, I don't see the connection yet with the price rise that Bitcoin makes at any moment. Hello, sir. It's a good question. It's about mostly what I'm interested in, talking to myself, trying to affirm my own thesis about Bitcoin. But it's about Bitcoin, money supply, economics, some stock stuff. More financial, economic than technical. Getting feedback from you guys on some charts. So this is then a disagreement of the thesis that I have. So you think Bitcoin's going to stay on the curve? If it is a power curve, you think it's just going to kind of hover around this for the future now? We have Wall Street shorting and longing and keeping the price range bound. Because that's how it was, actually. At times, they go negative, central banks. They don't always print money. This is the global monetary base. This is a global figure, all currencies. There's two things to keep in mind with this chart, though. First is it's all in dollars. So if a currency loses value against the dollar, as a lot of them did right here, it will go down for those other currencies. It doesn't necessarily mean that they're not printing. But I try to account for that and adjust for that with this chart. This is the trailing 12-month value, and this will show you pretty much if they are contracting the balance sheet on average globally. And they did it here for the pandemic, and they've been doing it in two specific periods here in like 2022, and then pretty much now. They're still contracting globally at about 1.5% per year. That's the run rate of contraction. What do you mean? Do you think we'll turn into an exponential curve? Which is possible, by the way. I don't say it's impossible. A lot of this stuff starts on where, or is based on where you where you start the calculation. And by the way, I think that's a reasonable thesis if Bitcoin sort of gets enveloped into TradFi. It would not be good for our freedom, sound money thesis of Bitcoin, but if everybody's taken out lines of credit against Bitcoin, then you can only have exponential growth because lines of credit themselves are exponential. It's compound growth. It's interests. Anytime there's an interest rate applied, it's compounding. This is also possible too. Yes, it actually means destruction of the money supply. On a central bank level, it's what it means. So it might be confusing to show it in this chart. I'm going to get back to you, Geo, by the way, because I have another chart to show you with this. But just so you see here, is it Logi? Let's look at the trends of the USA Central Bank over the last 100 years. Give me a second, I'm pulling it up. My charts are getting heavy. So here's the United States Central Bank balance sheet over 100 years. Right? Exponential trend lines, straight lines on log scale. All the economists learned on this trend line. They thought they had it figured out until they didn't. And here's printing since 2008. All right, log scale. Yeah, log scale. So here, after QE 1, 2, and 3, from about summer of 2014, they stopped. This is the size of their balance sheet. This means on the asset side, they hold bonds, which they bought from the banking system. Banks originally bought them from the Fed. The Fed doesn't buy direct from the Treasury. It buys from banks. So the Fed, it buys in the secondary market. So they bought the bonds. Not like that one old economic advisor says, they loan the money, they borrow the money, they loan the money, they buy the bonds. That's not how they do it. They buy bonds literally by printing. So you understand that part. They literally print it, both the physical and the digital. There's two components of this money supply. Bank reserves are digital, which they move faster. Then there's physical currency, physical cash. But then at some point, they might want to destroy the money supply, and actually destroyed it here. All right. So from 2017 to 2019, which they overshot it, as they always do because they don't know. They didn't even buy new bonds, and they let the old bonds run off on their books. And to do that, they literally had to decrease the money supply. So they would decrease the amount of reserves that existed on banks' books. The amount of money, basically. It's like the bank's checking account. So when you do that reverse transaction, you either let the bond run out in case the reserve would run out, or you sell the bond back to the bank, and the bank has the bond, the Fed destroys the money that it sold. So when the Fed buys, they create money. When the Fed sells, they destroy money. And they literally do destroy. I mean, this is a destruction of money. Then, of course, pandemic, silly season again, and they've been destroying money again. It went up to $9 trillion in value, and now they're down to 6.6 on the balance sheet. So that's how destruction of money works. Back to your point, though, Gio. Here is, again, my old chart of all the different trend lines. Let's take off stock to flow. Nonsense. Let's take off the 2016 trend, but here's the power. All right. I mean, it's possible that Bitcoin creates an exponential curve, not according to this one. It's possible. But according to the lifetime of Bitcoin, it's definitely not an exponential trend. As you know, I've talked about a long time. So it's from 2022, it hasn't touched the trend line of exponential. And you can also see how fast exponential grows. So this is why I keep saying, if it goes exponential, it's going to be good for Bitcoin. I mean, in the short run, everybody's going to make a lot of money. If the banking system is adopting Bitcoin and it's exponential growth, like everything else in the stock market, that's going to be great for Bitcoin in the short term. But there's a lot of pain points there, right? Like now you're centralizing it. You're applying interest on it because everybody's going to be taking lines of credit. And, you know, you're going to have new regulations and rules around it. It will grow fast, but you could also have a lot more instability, like the old banking system. But just to show you how fast it was, like the price and the exponential curve were crossing here in April 2022, 40 grand. But if Bitcoin was growing exponential, the price would be 500,000 at the moment, 560,000. So it's obviously not an exponential asset, but it is a power asset. It grows in power. The power trend is an unbelievable trend. So what do you have to say about that? Can't be both. Can't be both. They're two different systems. One has a fixed doubling time that is exponential. One has a increasing doubling time that is power. So power is more sustainable, as you can see here. Not really, no. It just takes the price. This model is purely mathematical. It has nothing to do with lines on charts and trading view or moving averages. It actually does have to do with moving averages, but it's incorporated into the model. So it's just it's calculation. This model is price versus time. And if you put a power curve on log, so this is log linear. If I put it on log, it's going to look weird for a second. But you can see stock to flow kind of stair steps. It's kind of a hybrid exponential power. It is a power curve, but it's a badly made one. I just said hybrid, didn't I? It's a power curve with exponential coefficients. It's just that doesn't make any sense. Stock to flow ratio, stock to flow model. So here we see, ignore these dates. This is a mistake in my coding, but the tooltip is going to be correct. So log makes early dates come slower, later dates come really, really fast. And if we zoom in, I don't know if this is going to work. Yeah, it's better. You can see on log, exponential is a crazy, it's an unsustainable system. All exponential curves eventually like break or reset. Or like Jeffrey West says, they move into a faster exponential. So that's exponential. But power is this nice, beautiful straight line on log. All right, so again, ignore this January 6th and 7th. It's a mistake. But if you follow my mouse on the tooltip, you know, we're kind of going through the days very slow, like just like normal days, right? But then all of a sudden we're in 2011, then all of a sudden we're in 2014, 17, 21. Like the days become very compressed at the back end. That's log. But it becomes this nice straight line. Yeah, for sure. It's going to affect it. But Geo thinks alt season could be done. Too predictable. Yes. You might be right, Geo. I mean, you might be right. It's hard to know. Let me take all these off and then take that off. Take that off. Right. But do you think this is the top here right now? Or do you think we're going to pump to 2x or 3x the trend, which I think we'll do? And when I say trend, I mean the trend of the black line, not the green line. This also shows you, like, I've heard a lot of these guys say that, oh, Bitcoin's still exponential. It's going to go exponential. It's not an exponential asset. Porkopolis. It's the nickname of my hometown back in the 1800s, Cincinnati. And basically, it was called that because there were a massive amount of hogs that ended up being raised in the Ohio River Valley that were, just it was good to raise them in that area. But then there are a lot of downstream effects from that, which people don't think about with economics. So the main example here is Procter and Gamble. They got their start as a soap company, a tallow company, because of all of the fat lying around from the hogs. And then Procter and Gamble ended up becoming a consumer products powerhouse, Fortune 10 company, and then eventually became a marketing powerhouse because of marketing these consumer products. All stocks eventually go to zero. So Procter & Gamble is one of the oldest stocks in America. We'll see if it will keep going, but it's just a slight nod to the unexpected things that can happen in the market based on certain conditions. Do you think there's going to be a pump, Gio? I'm curious. That's true. There's the old saying in the industry is it's okay to be a pig, don't be a hog. Pigs are a very politicized animal in the world. But everybody had a piggy bank. I had a piggy bank. I don't know about you guys. Do you guys have piggy banks in Europe? I think you did. Good morning, sir. Lovely moniker. Some, not all. If you go to my website, porkopolis.io, I only have one up now. I had more like years ago, but then I've changed my website. So this will give you a basic version of the power curve, both on linear and log, and some data tables. But it's too much every morning when I'm preparing these videos, I'm making charts or editing these charts. And the short answer is no. It's just, it's not possible at the moment for me. It's not feasible cost wise. Here's Bitcoin in terms of gold. It's another interesting one because gold is flying. So even though Bitcoin is on the trend in dollar terms, it's below trend in gold terms. So you'd actually be still pretty good if you were a gold investor and thought about getting into Bitcoin. You'd be pretty good selling your gold and buying Bitcoin at the moment at these prices. But are you talking in terms of like the Elliott wave or, leg up and leg down? Or do you think that's the top of this bull and then we fall back below the trend line or something? which region are you speaking about now? Because now I'm in Eastern Europe. Now I'm in Latvia. That's where my father is from originally. But Cincinnati is a nice town. I encourage anybody to go if you can. They have a great football, soccer, I should say, for Americans. But for all you guys, I'm sure Europeans, there's a few Americans on, right? It's football. FC Cincinnati. It's a good club. But gold is also interesting to look at. It's very similar. It's been moving sideways to the dollar, basically. So it's been very similar to the dollar all these years. But now gold is flying high. So this will be an interesting chart to take a look at in the future, how this holds up. If Bitcoin can pump past this, or, and even get up to the 90th percentile, or if it, in this dollar bull, if it doesn't get up as high. What else did I want to show you? Broad money. So this will also be updated. It's mostly updated. 116 trillion dollars is broad money in the world. Unlike my monetary base figure, I don't have this rest of the world. It's just it's too annoying to compile these things. So you're going to add at least 30 trillion probably, based on the top 5 is, as you see here, 80% here. I mean, you can just do basic calculations, and if it's 116 divided by 0.8, it's 145 trillion would be broad money globally. This is not the comparable money supply to Bitcoin. This includes all the bank accounts, time deposit accounts, money market funds, repurchase agreements, which are just liquid treasuries that trade like cash. Yeah. Well, I'll try to get the volume figures soon, like pretty deep volume figures, because I do think that's going to help us as well understand, if a blow off top is here. I mean, these charts are the best as well. I mean, just this one is obviously my favorite. Sorry, this one, because we have the bands, and we can see you get 3 months or less. October 2017 to March 2018. And the price that you're already taking here at March 2018 is not a good price. So you got to go. I mean, again, if you're going to take chips off the table, you had weeks to do it in 2017. Yeah, I do buy that thesis, that narrative, that part of this adoption of Bitcoin is going to be Bitcoin treasury companies this time, just taking stacks of sats, as they say. Rodolfo does a pretty good job keeping this thing updated, and Marathon, this Bitcoin standard treasury company, which Adam Back is going to be part of now, and it's also Cantor. The Cantor people are basically just become a huge player with 30,000 Bitcoin, taking some of Blockstream's Bitcoin, I guess. This is brand new, this one. 30,000 Bitcoin, $3 billion. And there will only be more. So it's a great breakdown. $97 entities in the US, 41 in Canada, 20 in the UK, 9 in Germany, 9 in China. I presume all in Hong Kong. How are they even in China with, does anyone know the answer to that? With the Chinese Bitcoin laws? It's probably all in Hong Kong or Macau. Could technically do that. Well, this is why I clickbait the title of the stream. So people like you can come in and correct the people that might have a little bit less conviction than you. I'll show you the top 10 percentiles. I know familiar viewers know what this looks like, but just to show again, I think it's one of the saner ways to do this. Yeah. Well, you remember everybody was saying that 100K was the top, 105K was the top before we pumped up to 120. Whoops. Is that right? Hold on. Oh no. I think I overrode that chart. I'm gonna have to do this again. Another reason why I don't have this stuff on my website. Sorry for the silent dead time. 1 second, check something. Why is this so annoying? I think I overrode it. Anyway, I'll come back to it. Yeah, I agree with that too, Tim. Obviously strategy's in a completely different league, and they have the ability to produce even more shit coins, which are commercial paper, to buy more Bitcoin. The ability of other companies to do that will be quite a bit lower, unless the price explodes and stays up, which it could happen. But obviously, I think all of these companies are going to be pretty fine, frankly, for a long time, unless they really lever up their paper. But It's one of my favorite quotes in all of finance. Was a guy, Rick Rule, who not sure how his health was doing, but he's a billionaire commodity investor, cyclical commodity investor from Canada. He used to do a lot of work with the KC Research newsletter, which is now closed up shop. But he says, or used to say, that no matter how good you think the government is at printing money, the free market can always do it better. No matter how good you think the government is at printing money, the free market can always do it better. And I think that's 100% accurate. The free market can print up mountains of penny stocks, convertible notes, preferreds, plenty of shitcoin-like paper instruments where you give them your money and they go do stuff with it that might be high risk, might be not so high risk. I think in the case of Bitcoin right now on the way up, it's pretty good risk, pretty normal risk. Thanks, Tim. Yeah, I always liked him a lot. I thought he was super smart dude. I know. My $0 marketing budget really just needs to. I need to improve it. But this is why I keep coming back to the idea. Like, I just don't know. Again, to your point, Gio, maybe you think it's different, but I'm not going to call these cycles over until they're over, and I can totally see a scenario just like this, even faster, like where we go to 300, 400K, come back down. People think we're going back to 150, and then we're down all of a sudden to 100. And then people start to get liquidated. And that consolidation occurs. It's very normal in the markets anyway. I don't know. I don't want to bet against that trend at the moment. Yeah, for sure. Yeah. Well, I'm glad you guys found me. I don't even know how to do that. I'm on StreamYard. All I can do is, can I put a star? What happens if I put a star here? I see a star and I see. Whoops. No. So JV. Sorry. Name goes here. Is StreamYard. I can't even see it. Congrats, John. Good for you. Hodl on. Hodl on. This is about not getting too worked up. Well, that is the question, my friend. But I don't think you can make that personally. I wouldn't make that bet until we've at least been through 4 years. 4 years is coming at the end of this year. And then we'll see. Yeah, I mean, probably if I was in the app or the YouTube studio streaming this. But this StreamYard thing where I can stream on YouTube and Twitter simultaneously, I can't see it. I can't. All I see is basically show your post or delete it. Put user in timeout. Don't think I need to do that for anybody. Ban user and delete their comments. put a star, which like saves it probably somewhere. Yeah, 2027, I presume you mean? 2020? No, 2026, you mean probably. Or just looking at the 2017 cycle, you mean? Yeah, no, I mean, the reason I showed the 2017 cycle was it was a really violent, quick once it happened. Yeah, 2026. So no, I think it's totally happened. It's totally possible that we could extend it a little bit and be the start of 2026 when it goes up. But yeah, I would say never say never or whatever. But I mean, if we get to the end of 2026 and we're still on the power curve, then I would say the people who predicted normalcy are right, Geo included. But that's what I was trying to show in my volume charts yesterday, and I can pull up. What on earth just happened to my? I'm trying to find my 90th percentile. But anyway, let me pull up the volume charts. Okay, so again, I showed this yesterday. This is not like great. It's going to be more detailed. This is only like top 20 miners, ETFs, balance sheet codes each, and then just Bitcoin spot volume. So Bitcoin spot volume still dominates. It's consistently higher now than it was in 2023. About back at the 2021 levels for spot. And if you take spot away, you're just looking at the big miners, big ETFs, big balance sheet companies. It's not that much volume. We went from a y-axis of 400 billion, which is really from this candle from this one day in 2021. But let's call it 160 billion, 200 billion. Let's call it 200 billion. Is the normal axis. You take spot away, 75 billion, but really more like 20, 30 billion. So this, to me, again, I'm trying to biasly prove my thesis. This doesn't, if you take away balance sheet companies, you're only at a $20 billion axis. And I don't, is that enough to move or to not move, to short away the volatility that could come from this, which is Bitcoin spot? I don't know. I like your conviction. So tell me this. If we have these bands, right? 1.1x the trend up to 2x the trend. All right, in 2017, we hit 1.1x the trend in May, and we were already at 2x the trend in October. All right, so it was a 4-month window. And then we had another month, 3 months, right? December was the peak. just take 2017 as an example. What do you think would happen here? Would we hit? I'm going to pull this out to here. Will we hit any of these? In your view, Geo? Will we hit 250? Whose real estate cycle? Trump's? Or retail cycle? Ah, well, that's what you're talking about. Four phases: recovery, expansion, hypersupply, recession. Where are we now? I'm on a whatever. Who remembers when I caught Gemini completely wrong a couple weeks ago? But this is Americans' real estate, right? Because this can't be a global theory. I've never heard that it would be a global theory. Is it? Does anybody know? Good morning, Sandro. Good afternoon. Yeah, I mean, it's also my bias is there too, because the original was the Kondratiev wave. Um, the Kondratiev wave, I was never a fan of. I thought it was even 80 years. Here it's saying 50 to 60 years, which is more, I thought, for the fourth turning. But if you believe in this, you can't really believe in World War I or World War II. One of them cuts right through it. So here they're trying to do it with like different industries, but if it's expansion, contraction of a general market globally, you could have it maybe work, I think, in World War I, but World War II sort of cut through. I was always thinking Kondratiev was like the fall, winter, spring, summer. And winter, like you can put winter in World War I, but then you can't put it in World War II again. It's too quick. That's the basic thing I always thought about, but I I don't know. Yeah, I mean, that's true for real estate. You're probably right for real estate. If you're speaking about the real estate cycle, because obviously the 10-year is a pretty big benchmark for a lot of um, industries. But anyway, I'm with you, Sandro. I wouldn't say dumb ape, because there's a lot of smart Wall Street people that I've talked to that have poo-pooed on Bitcoin for a long time. And we know Peter Schiff's view of the gold rock versus Bitcoin. I think it's fair to ask, in light of where this discussion is going, or at least me talking to myself and you guys writing, I think it's fair to ask, you know, is this cycle going to be as extreme as 2017 or 2013? And thus, if you might have wanted to lighten up on your BTC or for lifestyle changes, maybe shed 10% or something, if that would be ideal to do it this time, I think it's wise to ask that question. But I still don't, even from everything I'm hearing about all these new players and all of the ways to short Bitcoin now and to profit from volatility on the way up and the way down and to mute the moves, you still had, there were Deribit options here. There were CME futures here. CME futures started here where you could short Bitcoin. Miners could start to do it as well, and miners were doing it. I don't know. I'm pretty dumb with this stuff too. I'm not a technical trader, but this is such a reliable curve. And the 4-year cycle is still a reliable indicator so far that I have trouble fixing something that's not broken. Very true. That's the answer to your question, Logi. Mostly Bitcoin. Bitcoin first, Bitcoin by default. I don't know, but I certainly, shitcoins are the way to leverage a Bitcoin return without exposing yourself to negative downside, right? Again, this altcoin cycle might not be very good, but if you're buying shitcoins just for the thrills, at least you're not going to lose more than zero. Where you could if you levered up 8, 9, 10x. Of course, BitMEX would just close you out before you lose that. You go negative on your leverage, but I guess some contracts now would allow you to lose more than you invested. So it's a long way of saying I think if you think you have a shitcoin play that can get better than BTC in the short term, have at it. I've certainly tried, but I'm not an expert in it. It's the holy grail. Solving the blockchain trilemma. I guess I could start doing some ether charts to show the difference. Didn't ETH just pump in terms of Bitcoin? But as we know, the liquidity doesn't hold a candle to Bitcoin, and the Well, this indicator just doesn't hold a candle. I mean, it's not going to follow this beautiful curve as much. My thesis still stands. By the end of the year, maybe from the Bitcoin treasury narrative, maybe from lower interest rates from the Fed. But again, I think these are just little narratives. I don't think it really is the main driver. You have Bitcoin going, I think, 2 to 3x the trend. So 2x the trend is 250. And then I have my other chart, which shows the top 10 percentiles, but it's not working right now. So it goes up to 7.8x the trend, and that's never going to happen again, in my view. But 3 could. So that means 250 to 375. That's my thought on end of the year. And now the Geo's out telling me we're not having a 2017 again. We can compare notes when that actually happens. I wouldn't say the case will be settled by year end 2025, but probably would be settled certainly by year end 2027. But obviously, don't want to leave it too open. Bitcoin might turn into an exponential from some point, right? If TradFi fully adopts it. But so far, it is not close to an exponential. Exponential would give you crazy numbers already, such as $1 million Bitcoin in May 2026, where the power trend is 143,000. And then also, as I've shown a few times here, let's take off exponential. You see how there's 2 trends here? So we zoom in, right? The dotted line is the 2016 power trend, which again shows you how awesome this trend is, because this is from 2016 until now. It's not taking any data, this trend. It's only looking at data, pricing data that happened here. And then it stops. It just projects. And this is looking at all-time data. So it's an unbelievable trend. Nothing like it. It is. It should give everybody supreme confidence in what we're looking at. Again, why I keep saying this is secondary. These guys can't even be consistent anymore, right? Here was at least consistency. Well, economists of the world were growing up and writing books and textbooks and telling us that socialism was going to take over the world. At least here, they were printing at a stable 1-2% a month worldwide. But here, it's like silly season. Every season is silly season. Yeah. It's an awesome chart. And many of the people that have hyped newsletters, and I always hate to name too many names, but you would know, over the years talked about Bitcoin's exponential growth. It does not grow exponentially. This is exponential growth. It would be great if it was. Look at the price difference in 2050. I think it's quintillion, thousand million billion, no, trillion. $359 trillion per Bitcoin in 2050 if it was on an exponential curve. Whereas if it's on a power curve, it'd be something like 23 million. No, billion, sorry. Not 359 trillion, 359 billion dollars per Bitcoin. Projected on the exponential trend. No, it is trillion. It is trillion. It is trillion. 350 trillion. If Bitcoin was on a power trend. Thank you, Broadsword. Good weekend to you. Appreciate it. Thanks a lot. Yeah. It passes $1 trillion here in 2043 or 2043, where Bitcoin is projected to be 7-8 million on the power. And then it would pass $1 billion already in 2034. $1 billion for Bitcoin, 2034. Yes, this is true. Back to Geo's point, if it goes exponential, which it could, like you said, you could start. So let's take off this, but you start drawing a straight line from here at a lower rate, and then we just I think that you could. The reasons that go against that are primarily it's a network. Networks grow in power, like cities. Social networks, computer networks. That's the main argument, I think, that it will continue to grow in power. The main argument, though, that it will grow in exponential, as I've said a couple times now, is the TradFi system absorbs it and monopolizes it and takes advantage of every possible way to control society, where, yes, you can have Bitcoin, but you're not going to be able to hold it on your own. You can lever up Bitcoin. You can take an interest rate against your Bitcoin, but you're not going to be able to withdraw it. Then you are pigeonholing this asset inside of a system which is denominated by and dominated by fiat money, by fiat credit, by interest rates and loans and fractional reserve on the government scale. Fractional reserve, I don't think, is a problem on the private individual scale, because if you do that too fast, you will fail. But on a monopolized governmental scale, it's a problem. Yep, it's worldwide Burr chart. Yeah, I guess I misspoke earlier. I mean, it is true that these are exponential moves here, like they are from this period to here. It's exponential or parabolic, but only during that period. And yeah, if you look at the difference, I mean, there's a factor of 6 here. I'm looking at 6, factor of 7, really. I'm looking at 7,000 divided by 1,000, right? The 90th divided by the 10th. Here, it's a factor of 7. probably also a factor of 7 still. Would that stay consistent? I guess so, because I'm hedging it on the multiple. Yeah, it would actually, because I'm always on a multiple of 2 to 0.3x, so 7. This itself could be a faulty indicator, by the way, because the guys from Bitcoin Intelligence or 21 Capital. I have Cena here. He does great work, as well as Plan C on the quantile regression. And I know you can't see it on my chart, but this is log linear. All right, so these are right here is 2021 double top, 2017, 2013. You know the price curve. And what's actually happening is the highest quantile is farther away here, and then it gets closer here. And here the lowest quantile is farther away, and it gets closer here. Mine, it's a fancier, nicer statistical way. Mine does not do that. Mine just sticks around the same multiples. That's why I have to make it like sort of squirrely and not a solid line. But it is a solid line here, and it still looks pretty close, in my opinion. Yeah. I don't follow him, to be honest. I really don't. But there's someone who put his marketing dollars to work, much more followers than me, and I even posted the power trend on Twitter, first person, before he posted his stock to flow. Again, I haven't been caring about it really. Hasn't been trying to pump it, but the only thing I heard him say some while back, maybe a year ago, was, he's someone who thinks Bitcoin's moving exponential, which is weird because the stock to flow curve is a power curve mixed with exponential coefficients. I just don't follow him to know what he's really saying, but he did say, he said he thought that the power law crew, which include myself, Giovanni, these people, said to sell Bitcoin in February of this year. And I never said that. I'm sure Giovanni didn't say it or anybody. I'm not never financial advice on my show, but I certainly don't give buy sell advice. Yeah. Well, it gets people gets people excited. I have no idea. Is he? There's a lot of fake Louis C.K. accounts. Is he actually into Bitcoin? Good morning, Fred. Can't sleep? It absolutely is statistically false. I'll show you again the different curves on here. So here we have the two on the 2016 and the power, as we talked about. Same. His 2020 curve was here. This has got a lot of people excited. Just picks some coefficients and then runs with it like this is going to predict Bitcoin price. 2019 is better, but again, it's a false, it's completely false premise from the beginning because he's using things like gold, silver to make the coefficients of this model, and gold and silver are exponential assets. They're not power assets like Bitcoin. So it's a completely false way to start it. Although the formula that he uses for the stock to flow to get these stair steps is a power formula. So he's using a power formula with exponential coefficients. If you did not use any exponential coefficients at all and just did a regular old stock to flow trend, it would look the best. All right, so this updates every day, just like the black line up, not the 2016, but the regular black. This updates every day. It's better, possible, the Bitcoin price can catch it. Possible, but again, it's kind of a ham-fisted way to move into price extrapolation. And just, again, we're on log scale, so just to show you how far off the other models are, let's go to the end of 2025. So his 2020 curve predicts 6.3 million Bitcoin at the end of 2025. His 2019 curve predicts 800,000. That would be technically doable, I think. But then if he didn't do any of his wacky coefficients with gold and silver, and he just ran it on the data and updated every day, this is actually possible. Number 4. But again, if you say it's possible, it's not a model. It's not a normal model. Like a normal model should not try to predict the tops as a normal range. The normal range is the black line, right? That's what slices through most of the data. It's just not a cohesive and elegant solution. Just keep saying it to yourself. It's a power curve with exponential coefficients. That's what it is. Yeah. Like Fred says, it's the power law is simple. It's a one variable model, and that variable is price. Stock to flow is 2 variable. It's price and stock to flow. And the stock to flow model is a power model that uses exponential coefficients. Yeah, so this one is better, the red, as I did. This is just a continuous up. I don't even know if Plan B follows this like this anymore, but he was sort of sticking to old coefficients like it would make sense. And again, if you stick to old coefficients like it will make sense, why don't you look at another model that also does that? And by the way, we can do that with the power on the 2016 curve. All right, so let's zoom in, zoom in, zoom in, even till today. Right, well zoomed in here. We got 2 power curves lined up right next to each other at 109,000 and 114,000, the 2016 trend. And the 2 in the blue are power curves with exponential coefficients. All right, so incorrect to take gold and silver data and compute that as somehow it's going to help your model. That's what he did in his 2019 and 2020. So take those off. This one is at least better. This is mine. I mean, I don't know if he does it like following on, but this just takes every day's data based on whatever the stock to flow is at the time, and then projects out. It's better, but it's still a 2 variable model where the other one is 1. Yep. Fred gets it. He's got the Wall Street experience. He's got the Wall Street I think I saw a tweet from you. Let me go back to mine, which is the percentiles, which is a little bit different. But when you say 0.6 intercept, it means 0.6? Not higher than 1? Gives you 463K by the end of the year? Oh, okay. I see. Yeah. I don't even know what the intercept is itself. I have it on my. So my intercept here is a very small number, and you are taking 0.6 of that, and it will give you 463K by the end of the year. Yeah, you can shift them. No, I think it's all yes, it is the y-intercept. Not all of the these models regressions do the y-intercept. Only exponential, power, and linear. No, exponential might not even either, actually. I think it does. Log, I'm now trying to talk through math that I haven't studied in a while, but logarithmic regressions, the other coefficient besides the slope is where x equals 1. So it's not exactly the y-intercept. Okay, you might be right there. Power law intercepts are at 0. Is that true, Fred? Someone want to verify that as well. But yeah, I should know that as well. Right, exponentials. Can't be 0. But the intercept, I gotta check it. It's good questions. This one's exponential. You can move it. It can be 0 in a power. So exponential can be on it is a y wherever it is. With power, you're right. It can't be 0. No, I get it. I get what Fred's saying. I can switch the curve. I can do it right now if you want on this one. You're making the intercept 0.6. You're making the intersect 0.6 what the original is, right? Mm-hmm. Let me change it. And then rebuild really quick on this one. I get what Fred's saying on this particular case. I'm just going back to general math of intercepts for each one, because it's not always y equals 0. Someone was saying about y equals 0. It's not always that for every regression. For sure, logarithmic is when x equals 1. That's what the intercept is. And then the others I can't calculate right now, but name goes here as doing it. Hold on, let me update this. As Fred is saying, it will take 2 seconds. .6 the intercept. I get you. Let me do it. Why 0.6 though? Just testing? You test R squared or something? R squared still looks pretty big for me. Okay, I'm resetting. It's the wrong one. Okay, so don't look at my any of these. I went lower, Fred. I didn't do it right. Add 0.6. Okay. Not multiply. Got it. From the native, from the original power, add the number 0.6. It basically defaults to 0.6 because it's such a small number anyway. Running it. Sorry, slow this morning. I didn't do it right again. I got to change the formula. I know what you mean now, but I didn't. I can't do it on the fly like this. Hold on, let me. Going back to normal. All right. So run it with 0.6 added on every one. Okay, hold on. I think it's going to give me the same thing I just did. Is any of those in parentheses? 0.6 is outside of parentheses, right? So it would be separate. Running it. This looks better. No. Not doing it, Fred. I'm writing a formula for you. Should it be that? Hold on. Like this? Show me where the 0.6 goes in your example. Because I keep overdoing it. the formula I had though, right? Before the exponent, before multiplying by time. Intercept plus 0.6 in parentheses. I think I didn't do it in parentheses. That's a huge number. I'm doing it right. I can do log, but it would look wacky regardless. So 0.6 in the exponent. Let's try what name goes here says. That looks more normal. I don't know if it'll work. If so, then it's the slope, Fred, not the intercept. Running it. What name goes here said. Hold on. There it is. I think this is what you wanted to see. Ignore the multiples. They're going to be wrong. No, it's too much. The slope doesn't work. That was the slope. Name goes here. I can still put it in log, but it doesn't matter. This is fun doing this live, huh? While everybody sees me try to figure out the coefficients. Give me the actual coefficient. So it's 4, basically. I hear you, but I'm still too slow to... I got 5.78 is the slope. And that very small number, 1.46 to the minus 17, is the intercept. Are you saying the slope? So 5.54 shifted negative 1.5. So take it to 4, basically. I got 5.7. I'll take it to 4.2. I think this is what you mean. So you did mean the intercept, but you don't change the axis or anything, right? Just run the formula. I swear I'm doing this. I'll try it again. Done that. 0.6, running it. Would that number change over time, or it should always be the same, right? So it's if I add 0.6 to the small number, the first value is like 2 billion. It's wrong for me. I'm not doing it correctly. Do I need to also change the days instead of being normal units? This is the math geeks. I'm very simply, because I have it. It's a Google Sheets. That's how I run it. I'm adding 0.6 to the intercept, and the first value that comes up for x equals 504, which is May 2010, which should be a pretty small number, still is like $2 billion. It's not right. If I simply add 0.6 plus, then it's better. Actually, maybe that's what it is outside of the parentheses. Let me try this one. Doesn't seem very different. I tried this before as well. It's like almost the same. I'm just going to show you what I did. Yeah, thanks. I know it's trivial and I should be doing it, but probably just annoying other people now. But I'm literally taking 0.6 plus intercept times x raised to the slope. That's what I did. If I should put parentheses around it or something, I'm going to your Twitter. Yeah, I saw this. I'm confusing myself, to be honest, why that's not growing. Because I've definitely shifted it around with a few things, but in any event, show me after. Yeah, this is also true. It's not exactly the slope. It's more like a scale factor. It's like a scale factor. Really, intercept and slope, I think, would, again, I'm not a statistician, but that's like most applicable to linear. Y equals mx plus b. It's very different for exponentials, power, and logarithmic. But a lot of statistical programs still use the word intercept and slope for the same, because it's only those two coefficients. Anyway, now that we went through that exercise, I will put up Fred's tweet so people can see it, what he's doing. Here, what I was trying to do was just raising the curve up very simply. Here's the power, the black line on my chart. You raise it up to be here. And he's saying stretch case 463, base case 292 if you go up on that slope. And yeah, I mean, that's another simple way to do it too. Just look at the way, just look at, where it intersects. And I can still, by the way, do this with mine. I'll just, hold on, let me make sure I didn't screw up my, I got to reset this. So just eyeing what he's doing, 292, right? Yeah, this is not a perfect analogy, but his 292 end of year, below all previous peaks, okay, is analogous somewhat to, it's going to be above the 90, isn't it? Oh, no, that's gold. I just switched over, sorry. Too many charts now. Here we go. Finally back up. Back up. This not happening. This not happening. No, something's wrong. This is even, no, okay. So 255, right? 2x the trend is a 90th percentile move based on my multiple analysis. And that is a little bit less than his. So his is probably something like a 91 or a 92 percentile move if you thought about it that way. But still not much more than 2x the trend. There's a 0.4 shift and then a 0.6 shift. And then ultra aggressive is a 0.8 shift in log space, which would still hit the 2017. So you're multiplying, not adding. Is that what it is? Or even taking the exponential? This is why I'm bad with this stuff on math on the fly. Should I use this formula or should I use this formula? Name goes here is following. Multiplying in linear, right? I need to do it in, but I shouldn't need to change the coefficients, right? Those are not the coefficients, the x values, the days. They stay the same, right? So multiplying or exponential on the exponential. Is that what I'm doing? Someone help me. So you take the whole thing, multiply it by 10 raised to the 6th. I got it. I got it. I got it. You guys are so great. Take the whole thing, multiply it by 10 raised to the 6th. That's still going to be, I think, big, but. Just multiply the whole thing by 0.6, right? Forget the exponent. I think that's better. I don't know if this is going to work. Running it again. I'm below it again. Ignore my multiples here, but the all right, I'm using 4. I'm using 4 since name goes here is absolutely following this and smarter than me. I'm multiplying by 4. That's what you do. The whole thing. I got it. Finally. That's the curve. Sorry. There it is. So you multiply the way in Google Sheets, or if you actually would plot it out, is just in the normal function, multiply it by 4. So you're just multiplying it by 4. So instead of a $100,000 trend, you have a $400,000 trend. And absolutely, this is where I think I do agree with people that, it's going to be hard to beat this. But I'm still not discounting this out. I'm not discounting it. I think it's totally possible that we have a Can someone tell me conceptually, besides just multiplying this by 4, what would this? No, dude, you totally got this. Thank you. Name goes here. And Fred, thank you. I just conceptually not getting it myself. Yeah, I see that. You're right. I see it. But other than just saying that we're using 4x, the formula, I'm trying to think about, can we easily find a percentile from that number? Right. It is like picking a percentile, yeah. Thank you. Thank you, everybody, for sticking through that. Based on my multiple formula, which is a different thing, totally different, but you're somewhere in the 91st to 2nd to 3rd percentile. 93% of the observations are below this, if we would actually measure it. Yeah. No, I get it. I get it. It definitely, we've hit it before. And to play around on here, just say 3.5. I just took it down to 3.5x to see if it would hit 2021, and it barely does not. It was close to what you were saying. This is 3.5x, 440K, 3.5x. If I switch it to 4, I'll just tell you without refreshing it. If I go to 4 by the end of the year, it's 500,000. I get 500,000. 503,000. You definitely got it. I need to brush up on my coefficients, as I said, but maybe Fred knows this off the top of his head. If you talk about the 4 simple curves, right? Linear, exponential, power, logarithmic. The intercept would work on linear for sure. It would work on not work on logarithmic, because that's when x equals 1. That's what that coefficient is when x equals 1. I don't know about the other two off the top of my head, to be honest, power and exponential. But like you said, it can't be 0 on exponential. There you go. 10 raised to the 0.55 is the same thing as multiplying by 3.5 on log space. Thank you. It does work. I thought it did. It works on exponential. It does. It is this is the y-intercept on exponential, but not on power. Anyway. Yeah, not crazy. And I wish I got to go in and reset my. Oh, here we go. Now I found it again. Here's the top 10. This is my fun chart. So This is the fun chart. So this is now every band. Again, keeping in the multiples. That's why I have to do the goofy rainbow that doesn't. I have to do the rainbow that evolves. I can't do a smooth rainbow like Plan C and Cena have, but the multiples will stay fixed here, and it kind of moves in very nicely into the future. But the fun one will show that a 7.8x move, which happened back in 2013, is out. 4.6x over the trend's out. 3.9 trend is out. Now, so maybe 3.2, but I think just take it out. I know it's hard to see, but basically then you have, in my mind, you know, I think this could happen. But then we go back to what Gio was saying, and maybe we're done with the cycles. But do you think the cycles are done, Fred? I think we got another 2x to 3x, basically, is my thought. Good on you for listening to strategy. Yeah, that's great advice right there. How do we know, Fred? How do we know? You only know after the fact, after you can falsify it. Like for me, I've always just been saying if it's, you know, it's impossible. It's very hard to sell your Bitcoin. I can guarantee you that. And no one's, I mean, unless you're, no one's going to be selling all their Bitcoin at the top or even catching the top. But if you want to take like 10% off, 15% off, lifestyle, whatever, it's still hard to sell at the point. Yeah, I think so. I think you're right. Name goes here. Could be right now. We've moved down. I haven't followed his latest models, so I don't know even what he's saying, but I mean, I'm just thinking if it's not broken. Mm. And then? Yeah. Without a doubt, the saddest thing for anybody would be to sell 50% of your Bitcoin and then never get that Bitcoin back. If you think that that's, you know, if you think you're a cycle maximalist or, you know, understand, which again, I'm not saying that I am, I'm just saying it's happened before. But what I don't think is likely is that we go to 3x the trend and then stay above it and set in some new power trend that pulls the thing even higher. I can't see that happening. So you get back to the cycles. It was bad for everybody in Wall Street, right? I'm not a cycle maximalist, but I think this is, I started the show, Fred, talking about how this chart, which is the trailing 12-month move of central bank stuff, has been way wild for 25 years. compared to the first 30 years of my data, where it's been pretty consistent at 1% a month money printing. But since the dot-com boom and bust, it's been ups and downs, and 9/11 and GFC and pandemic. But any Bitcoin overlap in the market cap is circumstantial, I still think. Because you see, you have Bitcoin huge dips. They were still money printing. Here it kind of lined up, 2021, but here it's not lined up. So I don't think any of this matters for Bitcoin. I don't think Bitcoin cares. It's honey badger effect. I think it more is just about the adoption. Yeah, you're absolutely right. We need to talk about that Solana still. I'm sorry. I got back to you about that. But the DCA, you have to increase your DCA to keep up. Sminston has been showing some good charts of that. You can't, like other stocks, you can't average in at the same levels. Wouldn't it be makes this crashes harder if bubbles are bigger? Oh, good for you. That's single digit days, my friend. That's the Slashdot article. Are you a coder? Here. You got in here? This was this jump in price from 1 cent to 10 cents was the famous Slashdot article. We got a lot of coders in. Jeff Garzik, I know for sure. Others. Yeah. Yeah, this is good too. I need to put this up. I'm working on it. I'm trying to code it out. Good for you. You still have those Bitcoins? I first heard about it here. April 2011. But I was not buying. Too confusing, too hard. I wasn't a coder. Good for you. That's impressive. Do you have any issues with empty Gox ever? People that bought and held some here are in really good shape. That's amazing that you got in right there. Well, 2013 was a local top. Maybe you did all right for that era. Did you claim it? There's still quite a bit of Bitcoins left on Mt. Gox. Where are the exchanges? Yeah, still 45,000 Bitcoins. Hey, it's a good night out, San Francisco, right? be worth something someday itself. I will, like I said, I want to improve on this. Volume could tell a lot of story, and it's not that much for the Wall Street companies at the moment. I know I'm a broken record for those that have heard me talk about this, but during the election season, this isn't total, but this is like top 20 of each category: miners, ETFs, and balance sheet companies. Strategies in here, of course. You got to, at the peak in November, 50 billion. Now we're still at, add these all up together, 15 billion, 20 billion. Summer, obviously, but Bitcoin spot is still a huge market volume. Good for you. This is the stable coin, right? Yeah, going back to the trilemma of money. This is the fixed asset. Par is 100. It's impressive. It's impressive what they've done. How many other companies are going to do what they do as far as create these products to buy more Bitcoin? I know everybody's selling equity, but how many are able to create all these extra preferreds, convertibles, stable coins? How much demand is there? Yeah. Obviously, they have the institutional reputation backing as well. Yeah. What I mean, though, is, I'm not going to buy a preferred. I mean, I'm not going to buy from any of them. I'm a just BTC type person, but I'm not going to, if I'm a Wall Streeter, I'm not going to go down here and buy preferreds or convertibles. I'm going to go here. Yeah. Think so? Yeah. I mean, we'll go back to the money supply here. It's broad money. All right. Take off. Rest of the world doesn't exist here, but Britain, China, Japan, euro, dollar. This is dollar broad money. Not updated since March. 36.3 trillion. 8 trillion is repurchase agreements. Another 7 trillion or something is money market funds. That is directly analogous to a stable coin. So there's massive liquidity that is here that could move into, I think, stables first, or stable-like instruments, like you said, that can have a 9% yield. That's something Wall Street understands. It is wild. We basically minted his own stable. Not exactly, but yep. So with all this liquidity, with all this demand, all this appetite, how does this not stay intact? And this is an extension, by the way, people. If you're, my multiples are going to look weird here, but you can look at this. Let me zoom it out. Nah, it's not pointless, actually. This is 3.5x, the normal trend. And then what happens on the other side of that? What happens? We get to November, December 2026, midterm elections. Democrats win, come in really angry and frustrated and socialist, full of socialist rigor. Donald Trump's revealed to have Donald Trump and Co. and Howard Lutnick are revealed to have some scam behind some of their stablecoin creation, or their stablecoin creation is not happy. It's not following all the proper rules, and then we get a cascading of liquidations. It's here. 600,000. 612,000. Somewhat. Somewhat, thanks. So no crash back to prior high of prior cycle. No crash to 60K. Many Malox moments. Here's what I think. It's maybe a little bit caveman, but this is going back to the simple rainbow. These are never happening again. 7.8x the trend or 0.1x the trend is never happening again. But you can still easily go 2x, end of year, same cycle top, and then go all the way down to maybe not 1 this time, but the 2. And the 2 is 0.4x, the same very strong power trend. Midterm elections, people talking about Trump impeachment and World Liberty Financial going bankrupt. I'm not saying that's going to happen if anybody from the feds are listening to me. I'm just saying that's $77,000 Bitcoin. And then all these guys are going to snap that back up. So maybe we can do this again one more time, and then you start reverting back to the mean faster. Yeah, I'm hoping for the 60K, 70K bear for sure, especially if I'm lightening up at 250K or 350K. Maybe options are the better way to play this. What do you think about that? Should we just do options on leaps? Leaps on IBIT instead of raw buys and sells of physical Bitcoin, spot Bitcoin? Because there's a lot of people listening or watching that go back to the point about, a couple people said it here, you do not want to lose your Bitcoin at 200K, and then it keeps going higher. Options? Options tax inefficient? Hi, Luca. No, this is all a local sort of charting app that I created on my own. Unfortunately, I only have this on my site at the moment, which will give you a rough. I actually got to put the more jagged multiple percentiles here. It's the same. It's the same calculation, but I only have this on my website, and I got a lot of tables of how the trend itself is working. But it's just, I make these charts every morning and doing different shows and resetting them like just now. It's too much for me to host something like this, and it would get wrong half the time. My API is messed up. I'm just not very good at. It's easier just to stream and talk about it. Yeah, this Kelly allocation is a good idea. I need to do this. I need to make a chart of this. Mm-hmm. Yeah. I'm sure I'm going to get AI'd out of this for sure. It's another reason why I don't want to really invest in like putting it on a website. Can I pretty much draw this? I mean, if you told it, I've never even tried. Smart. You got a beautiful life, sir. Arizona, buying Bitcoin in July 2010. Oh, don't tell me you have a Cybertruck. Just kidding. Do you like it? My people that know that I'm too hardcore on Ukraine. My respect for Elon went down with the war in Ukraine, and he's just not supporting them with Starlink and things like that. But he still created it to help them. I mean, it's good that they can use it, but unfortunately, he's not exactly pro-liberty there. I think everybody's angling for business in Russia whenever this gets done. That's my comment. So nothing personal about the truck itself. It's mostly Elon's view of the free world is kind of different than what ours is in Eastern Europe. Fred knows if I get on this, I'll have too many Malox moments myself, so I shouldn't start talking about Ukraine too much. That is a down payment. Wow. Didn't know it took that long to deliver. That was their strategy, though, right? Was to get, I mean, that's for everything. Always pre-order, pre-order, pre-order. Interesting. Yeah, I mean, I don't know. I'm not judgmental on the products, honestly. I'm more judgmental on the political views, but yeah, I need to get a Starlink, by the way, because the terminals could come in very handy if we get invaded here and I have to move quickly with the family. Mm. Well, there's a price for everybody's Bitcoin, and trust me, I got the same regrets looking back at some of the exits that I made. So yeah, it's good lessons for everybody when you talk about. Probably I've said this before. I think the best meme is everybody gets the price that they deserve in Bitcoin, whether that's on the way up, the way down. This is what scares me the most. It's what scares us in the Baltics the most. You know, and I showed this chart already, but if you go back to the Fed's balance sheet, like all the geniuses, the socialists that are living well in California, and all the economists that were cutting their teeth in every single textbook that was written that I studied were coming of age in this, or already an adult teaching during this time. Milton Friedman as well, even before the Nixon shock, which is when this trend line starts. Like, well, let's just keep increasing the Federal Reserve balance sheet 6.7% per year. What could go wrong? Big bumps in the balance sheet in World War I and World War II. And then all this madness from the GFC. Yeah, he likes to use that story. And it's a good one. He's got $5 million socks per sock, $10 million pair. You're going to give me more Malox moments, Fred. If you mention him. Not Richard Warner. The other guy. I know there's a lot of Bitcoiners that disagree with me on this, but I'm not even going to watch the Mersheimer episode. It's so disrespectful to everybody in Eastern Europe. I will. Do you mean like this one? These power curves? They're projections. These are pretty, in my mind, pretty good projections. Statistical, well-founded. You know, as for those that have been following the stream now long enough, we were talking about stock to flow a while back. You know, that's not well-founded. Also, a power model made with exponential coefficients. This is very simple. You can draw different bands. Yeah, I will. Well, guys, I got to get a run in and also do a couple other things, so might have to cut it here. I'm going about 3 hours, so my memory card will run out, or already has actually, but hopefully the editor can get some good footage for cut downs. Fred, we need to talk more about the money supply stuff for the book. I'm happy to do it. Hello, Thomas. Good to see you. Good morning. Actually signing off, Thomas. It's just said got to go for a run, get the weekend started, and also a couple more work things before the weekend started. But no, thank you, Logi, for chiming in, and chatting. All the best. Tea time as well. Enjoy your comments. Thank you. Your name goes here as well for the math. Very helpful tips. Yeah, I'll check it out. I know people don't like to hear it, the broken record, but we're super worried on support for you. I mean, Ukraine is basically, they got, I know I'm switching topics from the Werner interview, but Tucker's not very favorable for Ukraine, and it's literally ground zero of the fight against autocracy right now. You got North Koreans there. You got Chinese kit, Iranian drones. And then Russia says to Ukraine, you can't have any help. You can have no help from any country. Neutral. No democracy can help you. I'm not a fan of Tucker. And we just talked about Elon Musk a while back as well, but it's hard to cut through this stuff. I got to get Starlink myself. That's what we're just saying. Anyway, it's a political end to the interview. I will watch it, as Fred said, because of the QE discussion. I will watch it. Can leave it here on this topic. It's one of the reasons why I'm still an inflationist and not a deflationist, or someone that thinks Bitcoin will also hyperinflate, hyper-Bitcoinization, because we have huge stocks of money that they're going to make us use, whether it's broad money. This is only the top 5, so this is about 140 trillion at least, or base money, which is 27 trillion. These money supplies, even though Max Kaiser says they're going to zero every day, they're not going to go to zero. They're going to keep printing. And actually, I'll leave you guys with one more. Talked about this a lot, but we have this. Everybody thinks the Fed's going to cut in the fall. Probably will. You know, this is way over the 1971 trend, which we're never coming back to. Here's the 2008 trend. It's well below that. So I think we can easily go back to this trend. $10 trillion balance sheet by $12 trillion balance sheet by 2028. No problem. Maybe not 10 trillion by 2026 end even. I don't think they're going to spike that quickly unless there's another crisis somehow, which could be. But this is the other one. If you look at the Federal Reserve balance sheet versus the national debt, this was an all-time high, right? 28% of the national debt when the Fed was topping out its balance sheet at the end of 2021. Now, 17.5%. So I think yeah, but he's a QE supporter, right? Yeah, yeah. Big battles. I mean, it's going to be interesting to see how the administration handles the Epstein crisis, and then maybe they'll help Ukraine and close the skies to distract everybody in MAGA. Would be absolutely furious, but at least free world would be a little bit safer. Anyway, Europe's got to get their act together more. I don't know in the G20, but in the top 50 currencies, of big countries, Turkey is one of the worst. They move at the UK is not terrible, actually. I mean, it's bad, but it's not. Turkey is going at 47. No, Turkey in the last 12 months, 30%. 30% increase in the monetary base in the last 12 months. Poland had a huge run up. This is to buy weapons. Poland went up 20%. Australia is still contracting, down 23%. Hong Kong dollar's a big one, up 10%. The rest are kind of down, flat, and down. Sterling's actually down 10% in the last year. That is the balance sheet of the central bank. Down to 780 billion sterling. They used to be close to $1 trillion sterling. Thank you, Bill. Appreciate it. If you can manage my Ukraine support, I know a lot of people in the, waking up in America, if you're Bitcoin supporters, some people are not supportive, but I know a lot of people watching this right now are, so I'm not trying to judge everybody, but living over in the Baltics here in Eastern Europe, we are as vulnerable as they come at the moment. After the Ukrainians. I mean, the Ukrainians are basically fighting for us. So it's wild days. And if you think about what they do in terms of a crisis, what they do in terms of a war, you're always going to have big money printing. This was U.S. entrance into World War II. Huge. U.S. entrance into World War I. Even though the Fed, more J.P. Morgan at this point, Fed wasn't really doing anything. The Fed owned 1% of U.S. national debt in World War I. It was just getting started. But there's nothing stopping them again if there is a war, and I hope that there's not. But still need to deter. Yeah, unfortunately, we did that to them. Budapest Memorandum from 1994 is terrible. That was the one thing Mersheimer got right. that he predicted that would be bad for Ukraine, and it was. It was a terrible agreement that a Brit or an American should feel for at least leaders putting their name on that deal, Bill Clinton in particular. Yeah. Yeah, Budapest Memorandum, 1994. In Ukraine's case, there were 3 countries in the Soviet Union that had nukes besides Russia. It was Belarus, Kazakhstan, and Ukraine. Belarus and Kazakhstan were all both kind of small, and also they weren't really like doing the hard stuff. Ukraine, some of the smartest scientists were from Ukraine. They still didn't have the trigger. They still didn't have, the trigger, basically. It was in Moscow. Even Gorbachev couldn't find his briefcase for a few days in August of 1991. But yeah, no, I know you didn't mean nuclear, but no, I mean they're pretty armed now, but nuclear I'm talking about. Actually, I didn't know you meant nuclear at the moment, but I thought about it when you said Second Amendment. But Ukraine should not have. I mean, there's no question that we can't say that this would have happened if Ukraine still had nukes, and they would have. They had a lot. And they had a lot of know-how and everything. You see what I mean? It's a lesson for the world. Yep. Switzerland has a great track record here, I think. Finland as well. We're a little bit, in my situation, we're a little bit like Luxembourg or something in case of World War II, or even Denmark. Small nations, just geographically not well located to a big aggressor. So that's what we're dealing with. So it's a little bit more than arms. But there's a lot of, militias here and a lot of people that are prepared. A lot. And we finished the stream last time talking about the mines, not the mines, the mines and the old bunkers in Switzerland, which are in the mountains, and there's like an unbelievable amount of them. And they started turning some of them into hotels, and they started just not using a bunch. Now they're coming back for Bitcoin mines and Bitcoin storage, and probably even more. Who knows? Anyway, yeah, I do need to run, guys. But thank you, everybody, for tuning in. Yeah, I know the Warburgs. There's a Warburg, actually, who's very good on Ukraine now. He's a YouTuber. We can have this discussion another time. I need to bring Tim Starr back on. He's a good historian with this stuff, but it was a hard pill for Eastern Europe to swallow, to be behind the Iron Curtain, and I can assure you, none of us wants to repeat it. It was a great thing I was talking about recently. This anti-corruption bill in Ukraine was being forced through by Zelensky, not because what Tucker Carlson might say that Zelensky is corrupt or whatever. He was multimillionaire before he went into politics. It was because they wanted to arrest more Russian people that they said were infiltrating these anti-corruption agencies, which is a requirement for EU accession, is you have independent bodies investigating corruption, like an independent FBI, but even outside of the executive, like in the judiciary, like the FBI is, in the Justice Department. So they tried to bring it under the executive control. Ukrainians were rebelling and protesting last week in the midst of a war. I mean, like getting shot at with shawheads in the night and rebelling and protesting in the daytime. And then they're going to reverse it, which is amazing. They voted just, I think, yesterday or the day before, like 400-0 to completely reverse that idea, to bring it under the executive branch. And that is a great sign. I mean, compared to Russia, again, which why would anyone think that Russia is doing great with human rights and liberty and courts and journalists being thrown from windows and CEOs, but and all your political dissidents are abroad or dead or in jail. You're never going to see that in Russia. You're never going to see this level of protest. So anyway, if I know there's a lot of this type on Twitter that is really rebelling against everything bad of the U.S. federal government at the moment, and I understand it, but living under Russia is way worse. So for us, it's just a relative thing at the moment. Yeah, I think, and Fred said this too, I think, it's all setting up for fall. They're probably going to drop it in September, and then it's gasoline on the fire. It's surprising to me, actually. I mean, it depends on who you talk to, I guess, but Finland, as a people, are way prepared, and they are, they've been doing it for 50 years. Like, the Baltics together are about the size of Finland. It's only 6 million people there. But they have, you're talking about gun culture. They have it. They have plans for supplies to be brought in. Everybody has an emergency supply kit. It's all very set up there. In my opinion, we've always been right about the Russian threat, but we are not as prepared nearly, and we're trying to catch up now, but it's not fast enough, in my opinion. Anyway, you will get this on this channel for those that are tuning in. A little bit of geopolitics, a little bit of economics. I do need to cut it off, guys, but I would say back to this. 95% of the price action to me is still here. 5% is all this stuff. Changes in the money supply, broad money supply. In terms of Bitcoin. 100%. That's what we need. 100%. We would love as much American help as we can get. But there's some cross currents we're dealing with, and I understand it. I understand that. The forever war culture, people lump this in with Ukraine, but it's just a completely different thing. That's where I'm going to leave it with you guys. Thank you very much, everybody, for tuning in. Everybody have a great weekend. And I look forward to going further down the rabbit hole next week. Take care, guys.